Hi guys, back once again for another weekly podcast with myself, Russell, and to my left,
Chris Pollock.
Hi Chris, how's your week been?
Yeah, well, we'll get to markets in a minute, but we started, Brad and I went out for our last round of golf for the year, given the weather's changing.
Yep.
Nice way to
so
start on Monday.
how did that pan out?
Yeah, we both did all right. We sunk some putts. Yeah, Brad was a little loose on the greens compared to normal, and managed to carry a lead into the last and then bring it home.
Just pipped him at the post.
Yeah, I was leading into the last hole for a little while before. So okay. We played Mark as well in the office as well. He was winning till the last one, and managed to.
Oh, they were both there, were they?
Yeah, cheeky par to finish on a tough par 4. Very happy.
Father and son.
Yeah, hopefully
destroyed.
Well, different Mark, but no, it wasn't both the Goldbergs. So yeah, it was good. It was a good way to start the week, and better than the week ended, at least for stock markets, right? Should we jump into Friday?
Oh yeah, should we?
Well, let's have a look on a 1 hour chart.
It was pandemonium, wasn't it?
Looks a little bit more dramatic when you look at it on a 1 hour chart around 4 o'clock on Friday.
Let me just bring that up.
Yeah, Trump announced that he was very unhappy with China, thinking that they were kind of pushing back on the deals, or at least the framework of the deals that they talked about with them, with the rare earth elements. Also, the way they want to finance their commodity purchasing from places like Australia used to all be through the dollar market. Now they want to do it directly into renminbi. So, Trump was very unhappy and decided that he might put 100% tariffs on China, not 100% tariffs, 100% more tariffs on China.
Where will it end?
And this is. The impact. We had about a 4% decline from highs to lows that day. A real big flush on the S&P. So pretty lively out there. But it wasn't really the S&P that was the story. It was Bitcoin, right? Bitcoin had its. Well, this is the Bitstamp version of it, but you see this on Friday. We had a huge liquidation, the biggest ever day of losses in crypto in the history of the market.
It was touching all-time highs as well, wasn't it?
Yeah, we posted them that week, actually, on the Monday, and then it kind of broken it down, reflagged into it a little bit, and then wham. I mean, on some of the, depending on who you're looking, Bitstamp don't have it, but we do have these lows taken on some of the other brokers. That's the nature of crypto, right? Different exchanges have different problems, but this was a hyper liquid is the exchange that had the issues, and there were some accounts with 60 million in them at the start of the day, ended up with hundreds of thousands by the end. So
what would have caused, why would Trump saying that cause Bitcoin to crash as well?
Well, let's look back on history here. This is a little bit of the microcosm of what we had in April. So we remember the April 2nd tariffs and the gap down into that day, the big washout that we had into April, and then we had the taco trade, right? The Trump always chickens out, which was took a week to happen. In this instance, it took 2 days to happen this time. In fact, we had Zero Hedge posted a Twitter comment on Friday night saying, I wonder if on Sunday Trump will say, "Oh, sorry, G, I didn't mean it, blah, blah, blah. Back to normal, all is well. Thank you for your attention to this matter." And then they said that would happen on Sunday. Lo and behold, on Sunday.
It's almost predictable now, isn't it?
Yeah, so this is kind of like, it's not as dramatic as the original tariff announcements, but it's pretty meaningful. What was most interesting about this whole thing, not just the liquidations that happened on Friday, but someone, no one knows who, opened up a brand new crypto trading account with Hyperliquid on Friday.
Okay.
30 minutes before Trump made that announcement, they went short the crypto market. They pulled out $192 million in 1 day and took the money out of the account.
That's not a bad day's work.
It's almost as if someone knew something. Do you want to speculate as to who? Because I do not want to go to jail.
I'm not sure that we should. I mean, there is kind of a little bit of a pattern going on, isn't there? Like, let's be honest.
Allegedly.
I don't know, mate. I wouldn't like to say impeachment, but anyway, let's move swiftly on, right?
Yeah, let's leave that one hanging. You can join the dots yourself. But yeah, that huge washout in the crypto market that day. But not everyone was a loser. There was one ginormous winner who had just opened an account that day. Go figure. So if you are trading this market, you are in the Wild West. Be expecting to see this sort of thing happen more and more. It's sickening, really. It's not really how financial markets should operate, but here we are. This is where we reside.
Especially if you was in a long position, because I know quite a few people in the office were actually in long positions at the time, because all the signals were pointing to an up move, and then suddenly Trump opens his mouth as per usual and ruins everyone's day.
Well, like I'm super bullish
Apart
these
from this
markets.
guy, Bitcoin guy.
Well, exactly. No, someone had a good weekend, right? But yeah, I'm bullish these markets. Maybe, it's not maybe buy it at every price, but if he keeps his mouth shut, we don't have this chat with G scheduled, although he did say he wasn't going to turn up on Friday. Now I think they're going to have a chat on the 29th, I think it is, of October in Korea. So yeah, as long as we don't hear anything else, I think it's the same as what we had. If we go back to the S&P here, the same as last time, right? When these came in on the 9th, we never took out that low, and we just kind of just zombied higher and higher and higher. This little liquidation might give an opportunity for that. A lot of flows are not in the market yet, apparently. For the end of the year, tends to be Santa rallies are a real thing. The markets go up into Christmas, and there's a view that the market participants are actually not as long the market as they need to be if they want to meet their benchmarks, which is the only way that they get to keep their capital. So they'll be arguably overweight these markets going into Christmas, which means highly leveraged long positions, which means the market should go up. But yeah, maybe not from every price, but I'm bullish from here.
I've heard from other sources that just before New Year's, there's normally a balancing of books that happen.
Yeah, so there's kind of like a refinance at the end of the year, depending on if the more money you've made, the more money that you can then reinvest in the new year as well, right? And people front run this stuff. So you kind of see, it's not like you wait till the end of the year and go, oh, look back, we had a really great year on the S&P. By mid-December, we get an idea of how the year is going to be, even by November, right? We kind of get a view of how good this year is going to have been. So there's already a front running of the fact that there's going to be more money coming into the market in January. You often, not always, but you often get a decent start to the year in the stock markets. Jem Karsan, Jam_Croissant on Twitter, has been very vocal on this stuff, saying that he thinks it's going to be strong till Feb March at least. So, yeah. We're talking about this AI bubble, but, and it will burst. I was playing golf with a guy, Mark was traded during the .com boom, and he was saying it was everyone was just scratching their heads as to how this was going so high. I don't think we're quite at head scratching levels on AI yet, but I think we're going to get onto AI a little bit.
Yeah, so I'm not sure about the bubble bursting. Let me just get this up here so I can read it. Yeah, so BlackRock has actually been saying that by 2030 they're expecting $700 billion a year investment into AI infrastructure. Now, I know everyone's always talking about, investing in these AI companies and this and that, but I think that there's really good investment and trading opportunities to be made in the infrastructure around sort of AI. So we're talking like, the data centers, the absolute massive power it needs, and all the other factors around it. I mean, for example, which has really surprised me, because as you know, last week with the Nvidia thing shooting up like it did. So there is another company that I want to talk about, and that is actually Seagate, right? That's been a bit been a bit under the radar. So this is on a one-day chart.
We're sharing this now, yeah.
Yeah, so we're sharing this. So what Seagate has done has actually invented like a new kind of hard drive that basically you're able to like create smaller data, so more data goes onto a hard drive. And by creating that, they have like basically created themselves. They've gone from, let me just open this other page here. Right, so this is their performance. So you can see at the moment, if we look where they are not even anywhere down overall, okay?
Yep.
But if we look at their performance over year to date, you can see that they are, hang on, where are they? So here they are. Look at that, 156%.
Not bad.
On a 1 year return. I think on here.
Yeah, third place behind Robinhood, and who's
yeah,
WDC? I'm not sure who that is.
Yeah, 150. Yeah. So 200. was that 213% return
in the last 6
just
months.
in the last 6 months.
Yeah.
Yeah, so, you know, there is definite opportunities coming up, you know, looking into what drives AI, you know. So, so that's some advice there for people that are looking to maybe invest in certain companies.
Yeah, I mean, not investment advice, of course, but no, absolutely, it's a volatile one, right? So be mindful. I mean, it's something you probably could day trade. I'm not sure what the float is, but yeah, it looks like a pretty lively chart based on what we've seen there. So yeah, I mean, something to take on board. Even
if we put it, can we let you do it? Go to TradingView, and then if you put it against the Nvidia, which is just it's just there, yeah. You just put it. There you go. I mean, it has rallied quite extremely, right?
Yeah, I mean, there's pretty close correlation between these two, you would have thought, but yeah, it's been
it's like a late runner, isn't it? Look, if you see.
Yeah, especially on a magnitude basis, but yeah, this is not a company I've really followed. I'm not huge on individual tickers, but yeah, this looks like a pretty lively one, right? I mean, talk about the move up, right? But even this move down to me looks pretty terrifying, right? If you're buying it up the highs there, we are seeing like a 20%. This is like bear market territory. It's almost got into. But hey, let's see if this is a dip buy, maybe something you can do a little bit of research on.
Yeah. So obviously gold all week has been. Well, last week has been a bit of a crazy situation, right? All-time highs printing.
Gold again, printing all-time highs. I mean, it's the silver market that's really interesting for me. So if you look at like you've got a trend line on here as well. Gold posting all-time highs. If you look at silver, the futures market. Normally, futures are priced more expensively than the spot market because things are gonna, it's called contango is the normal situation where the front month contracts are cheaper than the long-dated contracts. If you look at silver futures, we're up. So these have an expiry every month. These are 50.26. Look at the spot market, though, in silver. XAUUSD spot, we are up at 51. So we actually have the cash market ahead of the futures market, which is something called backwardation. This is incredibly bullish. Okay. In the short term, it can create real squeezes. The view is that there just isn't enough silver in the West. Full stop.
Yeah, I actually... About 6 months ago, I saw a post about this, and it was to invest in silver because, like you said, it is running out, and it's used now more and more for just things that you wouldn't even think that it's being used for. Yeah,
it's in every bit of technology you use, right? In this mouse, in the keyboard, in your phone, you name it. It's going to be in everything that you use. It's also a byproduct of other mining operations, so you don't have silver mines, right? I think there was only ever one dedicated silver mine because it's so cheap, right? If you think about the price of gold per ounce, you're looking at $4,000. You look at the price of silver an ounce, it's $50, right? To put all that effort in to make $50 an ounce, is it really worth it? So it's like a byproduct of mining things like zinc. So it's not as if you can just turn the silver mines on, there aren't any. So the supply story with silver is really, really interesting. But the fact that we're in this backwardation can create big squeezes. Again, though, I mean, the volatility is apparent in this, right? We had a big spike up. I was watching this. Was it Thursday? Oh, this is the XAU. If I look at what happened right before the open on, where are we? Was it Thursday or Friday? I was keeping my eye on this. Thursday. I was watching this into after the COMEX open at 120. It rallied up a little alert just shy of the 50, which is this tagged, funnily enough. But I was just keeping my eye on this 50 level. This has always been a long-term number in silver. There was a high with the Hunt brothers around $50. Okay. Some people saying 52, someone slightly lower. But this 50 number is a big number. We got within a midgie's willy, as they say, and then we had the rug pull that took it down into the 46 handle. So it's been volatile. This is.
Was you in that move?
I was trading gold. Oh, okay. I was using it as a signal for gold. As soon as it went, as soon as we had that that shock in silver. I haven't traded silver for a long time. I used to trade a lot of silver in my younger days, but this, just led me into a gold short. I mean, I would have had on a risk-adjusted basis, probably a little bit more out of silver with a stop above 50s, but it didn't take too long before, bang, we've gone and popped through that this morning. So
is that like a trading idea then, to watch silver?
Well, if like traders, for me, like trading is not necessarily about what's going to go up and to the right on the screen. Right? Yeah. I don't really care. What's volatile?
Okay.
But what is volatile to a point? Like I'm sure a few of us had some tough days back in this volatility in the S&P here. Like this was too hot for me. Like the stops that you needed on these days, this was hard. Like I had days where I made tons of money, but other days where you just get wiped out on every trade because the stops are just, the volatility is insane. So it might be a little bit hot for some people trading silver, but if you love volatility, then silver is a really, really good place to have a look. You can get some very meaningful moves. It has a very direct correlation with gold, so you can kind of run the two charts side by side, and you can see the divergences that are occurring and where the buyers are stepping in and what have you. If someone hits gold hard on the downside, well, silver's going to be an outperformer to the downside. If someone bids it and we get a big rally in gold, silver will outperform gold more often than not. So yeah, it's just like a high beta gold effectively. So if gold ain't volatile enough for you, it is for me. But if it isn't volatile enough for you, then maybe silver can be the thing that wets your whistle.
Bit like the NASDAQ compared to the S&P, right?
Exactly that. And like, this is not what I'm looking for, but if you look at the platinum and palladium futures, if I can go to the palladium futures, are also incredibly volatile now. This is one with a pretty nasty spread. The platinum futures too. These guys are up more than gold this year. Gold's the story, but all of these have been outperforming gold. And there's kind of this redistribution when there's no more gold to be bought and people want to buy something else. This is why a lot of money is flowing into those other precious metals. So you might hear more about your platinums, palladiums in the platinum group metals, even rhodium, and a bit more on silver as especially in the articles over the weekend, having cracked that 50 level on the futures today. I think you'll be reading about it in the papers this weekend. Okay.
So what's the things to look at for coming this week? Obviously the government's still shut, so
no data. No.
But I did hear, I might have heard something that there is going to be a data release around the 24th. Right?
Yeah, so CPI was on the, and some people are still telling me on some of the calendars I'm looking at that we're going to get the CPI when we were expected to get it on the 15th, but Friday the 24th, for some reason, CPI is finding itself in here. Okay. There's a view that they have to do the CPI number before the end of the month because a lot of, I think it's the pensions, are all linked to inflation. Okay. So if they just don't do it, then they won't know how to adjust all the pensions. So it's just like, rather than backdating it, it creates a real headache. They're just going to do it later. Hopefully who cares? But hopefully the government's back by then.
Someone will be doing it pro bono.
Yeah, I kind of miss the data. But the great thing about data this week is we don't need it. We have earnings. So this week, starting tomorrow, if you look at Earnings Whispers, really good website if you don't use it. Recommend it for keeping your eye on what's going on in the US.
Bookmark this, people.
And I'll do the same for ours as well. This is a big day tomorrow. So we're talking, later than normal on a Monday. Well, consent to, we'll sell them everything if they want. If you go to the calendar for Tuesday, tomorrow, we have some absolute mammoths, although it's not showing up on here. Tuesday the 14th. Where are my BMOs? Why is it only giving me those? Okay, let's do this a slightly different way. JP Morgan Chase.
Is that tomorrow?
They are out tomorrow.
It's my birthday tomorrow as well. So.
All right. Well, it's a mega birthday for the for Dow Jones traders out there. 6:35 a.m. Eastern time is 11:35 a.m. UK time. It's 5 hours difference until the last week of this month when it I think goes down to 4 for 1 week with the weird timings. JP Morgan is the biggest bank in the US. Goldman Sachs is the biggest company in the Dow Jones. It's over 10% of the Dow Jones now. This is out at 12:30 tomorrow. If you want to trade, I mean, volatility is there. We don't need any extra juice. But if you love this sort of juice, I do. I only really trade the Dow Jones during the earnings seasons. And it starts in earnest tomorrow with JP Morgan and Goldman out the same day. This doesn't often happen. They normally like to space them out. I'd prefer it if they did. Because it's going to take up all my trades tomorrow.
So how would one go about trading these? Because I can see there's an Earnings Whisper. What does that mean?
Yeah, I don't worry too much about the whispers and trying to make predictions on this stuff. Okay. In fact, I don't even really care about the numbers particularly because we also get something called guidance. So the problem with earnings is it's a backward-looking number, like everything.
It's already, okay.
So it's kind of looking back on how much money they made in July, August, September.
Right.
So this is why we're getting it in October. It's the start of the earnings season. Everyone's reporting. If you're on the stock markets, the stock exchanges, you have to legally, at least for now, Trump's trying to make this every 6 months, not every 3, because he likes more grey, arguably. But I would hate that if that were to happen for me. But you get these numbers, how much money they made. What was their profit per share, the EPS, earnings per share or earnings, and then what was their revenue, how much money went through the business. But you also get something called guidance, where the directors will outline what they think will happen this quarter. And because the stock market is what they call like a forward discounting model, it looks forward. It doesn't care how many chips Nvidia sold last month. It cares how many they think it's going to sell a year from now, 2 years from now. So when the earnings and the guidance is improved, then sometimes these numbers can be bad, but the guidance is up and the stock rallies. So really just watch the stock. It's hard to trade these stocks though at this time of the day, because most brokers don't allow you to trade US stocks at that time. There are some that do. Those that do will charge you big margins. They will give you big spreads. The volatility is insane. It dwarfs non-farm payrolls on an individual stock basis. But by trading on the indices, it dampens down that volatility. There's still, the indices obviously are open 23 hours a day during the week. So that is a kind of proxy trade for trading these earnings releases.
I'm guessing these two companies probably have high weighted on some of these indices, correct?
Yeah, JP Morgan's 4% of the Dow, but it doesn't really matter how big that one is because it's just the biggest bank.
Okay.
So even, and you get like a contagion effect for the whole market, really. If JP Morgan report well, Goldman Sachs stock will go up if JP Morgan has gone up even before the Goldman Sachs earnings, because the view will be, well, if those banks did well, this one must have done well. So it also has like almost a disproportionate, certainly risk-adjusted disproportionate effect on the Dow. I'll be trading it. I'll certainly be hitting it tomorrow, whether I make money out of it or not. But I will be out of it before the open, these open volatilities. I'd be surprised if we don't get more than a 400 range up and down tomorrow. Maybe it's just one way, but you'd expect to see more than 1%, especially given all the volatility we have kind of coming into Friday afternoon, and then again with this gap open on Monday. It's going to be a hot week.
Cool. That's some good advice for people there to tune in tomorrow and see what's going on.
Yeah, so if you're in Dow trades at that time, you would be remiss to not pay attention to that.
Enzo's live trading tomorrow, so I'll make sure that we might be able to catch some of those news, because I will still be in tomorrow. So.
Oh well, dedication
doing
to the cause.
Live trading, yeah.
21 again.
Yes, well, something like that.
Yeah. Okay, good stuff. Good stuff. You're looking well for it.
Thank you.
But yeah, there's not too much else to say really. We've got Powell talking on the tomorrow evening, which might be interesting because there is a feeling that the rate cuts that we're pricing in for the start of November or end of October maybe, we aren't going to get any data, and the Fed pride themselves on being data dependent.
Yep.
In the absence of data, can they then do the rate cut? Well, the market's pricing it in with a 99% certainty still. Okay. So this, if he's going to give any inkling that might not happen, he'll do it here.
Okay.
Tomorrow night at 5:20.
Is there an embargo on what they say soon?
Soon, yeah. So I think we've got another week, maybe. Okay. I think we get a lot of Fed members this week. We got Waller and Collins out this day. Mira and Breeden. Schmidt's out here. We got Barr on the go. Bowman. Everyone's having a go this week, but next week I think it dies down. I'm thinking if my calendar's correct.
So these, and obviously the government being shut, these might be the. Everyone might be trying to trade these, so it might be more,
what else can we go on?
Volatile than ever.
I think earnings are going to be more volatile as a result. People are going to pay more attention to them because it's all we got. Plus these Fed members, if you're not paying attention to these people, you really do, whether it's through the Twitter lists with the squawks that we've set up, or paying for an audio squawk to hear what the hell is going on. If you're not listening this week to those events, you could easily get chewed up and spat back out.
Okay. Some more great advice there for people.
But yeah, not too much else to run on really. I think that's kind of the core of the week. This week's not looking especially heavy in terms of news. This PPI stuff, I don't think we'll get that if CPI isn't coming out. UK data, we got some good 7 a.m.ers Tuesday and Thursday. We've got GDP and everything else that comes with that. Plus the UK's equivalent of the non-farm payrolls, right? We've got our average hourly earnings, our unemployment rate, and the claimant count, the kind of unemployment, jobless figures sort of thing. So that's out tomorrow morning at 7. Could be some moves there. Other than that, I'm just really poised for earnings and gloating to bread.
Okay. Oh, well, you are the champion. That's twice in a row now, is it? Or?
No, I just picked him. I think I'm 3-2 this year.
Okay,
so I think he's keen to get out again.
Still everything to play
for. I thought we'd said this was the last one, but I think you might want to play again.
Your championship throughout to the new year.
If I putt like that, I will.
All right, cool. Well, I think like you said, we wrap it up there, and I'll let you do the honours and say goodbye to people.
Well, thank you for joining us as ever. I've been Chris Pollock
and Russell. Thank you very much. Remember, trade safe, guys, and see you tomorrow for the live trading.